So what should value investors do in such a market? We have a value investor, eminent value investor, who is joining us now. A bit, the value investing fraternity is slightly perplexed right now. Aveek Mitra is actually joining us, a good friend and a value investor. Aveek, you're joining us today from New Delhi, Kolkata, or US?
Sir, I'm in Delhi right now.
Okay, great. Enjoying the Delhi
It's too
chill.
cold in US.
Okay, good. You're enjoying the Delhi chill right now. But Aveek,
Yeah.
are you as a value investor who doesn't pay a high price for high growth, but rather want to go for valuation comfort and reasonable growth? Are you finding it difficult to look for stock ideas in this kind of market?
Thanks, Ajay, first for having me in the show, and wish you a very, very happy New Year.
The same.
Wish this year go as good as past year.
Thank you very much,
So now,
Aveek.
first of all, I think I want to demystify one thing, that I don't call myself a value investor anymore, because we actually are seeking value in every pocket and every situation in the market. So that way, the conventional value investor definition may not suit us anymore. Having said that, yeah, I find that there are frenzies in the market in some pockets, but as we were discussing some time back with somebody, that on a 10-year median basis, I think Nifty 50 or Nifty 500 both are actually within a very reasonable range. It is not that it has gone out of the whack. So, and that may have reasons which we can discuss going forward. And as far as we are concerned, yes, we are investing. We are investing into very, very opportunistic bets right now. We are extremely cautious, but we have not really come out of the market. We are still invested, mostly 95, 96% invested in most of the portfolios.
Aveek, I understand that you've been researching the metal pipe or specialized metal pipe space very closely. Now, we saw a lot of activity in that space in the market. There was a company, JTL, which did a very successful fundraise. Then there was MAN Industries, came out with very good set of guidance. High-tech pipes, Delhi-based company. Again, good numbers, indication of good numbers. This entire, in fact, Surya Roshni, which has a pipe section, doing well. Malabar also did block deals in some of the pipe companies. I want to understand what kind of opportunity does it provide as the application is going beyond oil and gas towards water. Are they trading at good valuations? Are you finding good value here in some of the names?
Yeah, some of the names, actually, what we find is that the kind of expansions they are planning, and I also found that some of the promoters are consolidating their businesses and putting it under one umbrella than putting it under different things, because now everybody is looking into the market cap. And we have recently invested in a company when they have actually merged their all other entities and came out with some kind of a capital raising, and then again planned increasing the capacity to 1 million, and we have planning to raise a capital very soon. So you see this as a proxy to the industrial growth which we are seeing, and the industrial cycle and the capacity addition cycle which has started. That is number one. Number two is that if you see with the GST implementation, the kind of warehouse and related activities which will be coming up will have a huge opportunity for this sector. So it is directly correlated with the economy with a multiplier of almost say 1.5. So if the economy grows at about say 11% nominal rate at 6% GDP and 5% inflation, then if it can grow at a 15-16% for at least next few years. So that is how we have actually got into one of the stocks which has number one, consolidated all its entities, raised capital, now increasing capacity. So that is how we are looking into this opportunity.
Point. So something you're looking at in the metal pipe division, some of the names we spoke about for indicative purposes, and one of them is what Aveek actually likes. The other area I want to talk about is banks. Now we all know, lately banks are not doing a whole lot, but last 2-3 years banks have done phenomenally well. Private sector bank, PSUs got re-rated. But there are certain banks which haven't really moved for years, in a row. I'll say even a decade. But now it appears that promoters are actually wanting to raise stakes. We have seen some of the underperforming banks like RBL Aveek in the past, when there was a conscious effort to improve the return ratios, and improve their efficiencies in their operations, stocks have got re-rated. Do you see some opportunity in smaller banks, similar opportunities here?
Yes, recently actually we have invested in a bank for a very simple opportunistic reason. Once again, when we found that the promoters which were having bottomless money, and they have actually not invested much into this bank for quite some time, but recently they have announced that they're going to invest at about 137 rupees a share. And the stock is a very small bank, and they have not been able to generate the kind of ROA which is expected from this kind of small banks. But going ahead with promoters' interest of increasing the Tier 1 capital and their subsequent focusing on the sectors on which they were basically good at, like the SME and the uh, micro industry space, and also the personal loan side. So we find that there is again an opportunistic bet. But having said that, if you are talking about the banking as a sector, we are not presently very positive about. This particular pick is primarily an opportunistic bet.
Aveek, which are the areas where you're booking profit? If you could share name now that you're out or trimmed, it will be even better. Just for understanding purposes,
Yeah.
where things have looking completely ripe now, and all the positives are already in the price.
Ajay, first point is that we have totally missed the PSU rally. Okay, so we never invested in PSU, so we can say that that kind of profit booking of say 5x, 10x was not there for us. But at the same time, we have actually trimmed our positions in all the EMS category because of the very high valuation and the low margin. And I don't think the kind of valuation the market is giving to these companies will need quite some time to match it, or they will consolidate. I'm not saying the prices will fall very rapidly or something wrong in these companies, but we find that there are better risk reward opportunities. So we have trimmed our position in Syrma, Dixon, and this kind of companies after holding it for quite some time.
Are you seeing some kind of a risk in this market, a week? Because I know you are a very conscious investor. You don't chase ideas. You buy it
Right.
at your own comfort and valuation and reasonable visibility. There is a sense one gets that there's a lot of FOMO, fear of missing out, among bulk of the investing janta, and hence things are getting stretched on the upside in select pockets. You have been around and seasoned long enough to not fall for those kind of attractions. Are you a bit looking around and taking stock of all of that?
Yeah, we are actually, I think most of our time goes into tracking on the portfolio of our investors and ensuring that their gains are protected and they are gaining steadily. So, having said that, we are always making the investors conscious about the kind of excitement and exuberance in the market. But at the same time, we have not asked anybody to really book profit in a serious way. Reasons are two. Number one is that we find the long-term story is intact, and I think it has been told umpteen times in your channel by many, many people. And second thing is also very, very commonly known that the flows will also remain intact because the Indian investors or Indian savings fraternity has made it a point that they will shift out from all their asset classes and move into equities. And as soon as the Fed rates goes down or inflation comes under check, our post-Indian election, I think the foreign money is also going to come. So keeping those in mind, we are remaining cautious. We are really concerned about valuation of the few pockets, but at the same time, we are okay with investing here and there and trying to make conscious calls where we find that the opportunities are still there. But at the same time, we will be the first one to book profit if we find that there are problems which are actually emanating from geopolitics or from areas which that many areas are there, like the election here in almost 50 countries. There will be huge amount of fundraising by governments in different countries like US, UK, India, Italy, and other places. So we don't know how the credit market will work, and we don't really know how the geopolitics of the Asian region will work. We don't know about how the Europe will come out of the crisis which is there presently. So this kind of macro crisis can come up to the market, but I think that on as far as our stock picking is concerned, we try to see that we play around or avoid or try to escape as much as possible out of those pockets.
Point, and that's how an investor, prudent investor, should behave when managing own money or even client money over the long term. Aveek, good to have you on the show and share your thoughts on where you see value and where you've been trimming, or
Thank you, sir.
also about the
Great.
environment, the overall investing environment. We'll